Welcome. Today we're talking with Rick Jarrar. He is the Chief Lending Officer at KEMBA Financial Credit Union. Rick, welcome, and thank you for joining us at Credit Union Digest.
Hi, Larry. It's good to be here with you.
Good. All right. Well, thank you. So, Rick, as KEMBA's Chief Lending Officer, what are your challenges that you see in your markets?
Well, there's lots of challenges this year and in the next couple of years, but I'll try and narrow it down to the top three. First and foremost, I would say inflation and rising interest rates. Those two things have really put a damper on demand. Borrowing has slowed down, especially as a lot of us know on the home refinancing front. We don't see values dropping as much as some media posts are saying values are going to drop. We think that growth is going to slow down a little bit, and there's going to be some stabilization in the market, which is not necessarily a bad thing, but demand is certainly down. So that's a number one challenge. Second, I would say is credit quality, and a couple of things on that. There's some recent statistics I was looking at the other day that show that bankruptcy filings are up 20% January of 23 compared to January of 22. Chapter 13 individual filings are up 32%. So that's pretty significant, and hopefully that's not a sign of things to come. Hopefully that's just a blip, and obviously 1 month does not make a trend. We are seeing some uptick in the delinquencies in our own portfolio, especially the unsecured book. The abundant liquidity that we sort of got spoiled with over the last couple of years with the government stimulus money has dried up, and with inflation, reality sort of setting in now. We are introducing some new technology to make it a little bit easier for members to do business with us on that front, such as text messages to members to remind them when payments are due, and also giving them the ability to make a payment through a text message. The loss prevention team, or collections team, as we call them here, the loss prevention team, believe it or not, has the second highest net promoter score within the credit union, which is a testament to how well they work, or how well we at KEMBA as a credit union work with our members during difficult times. So despite the delinquency increases that I mentioned, we have no plans to modify or tighten our underwriting guidelines or our credit policy. In fact, this is when we actually shine, when banks cut back and begin to exclude the neediest of consumers. That's where we step in and give them a chance. And another piece on the credit quality, we've seen a decline in the used car values over the last few months, which impacts the recovery on repossessed vehicles when they're liquidated. Sellers got spoiled over the last couple of years with the appreciation on these cars. Inventory now is back in stock, and things are going back to normal. The third challenge, which is not necessarily unique to 23 or 24, is in the area of regulation and compliance. Now, we at KEMBA are really fortunate to have an outstanding team that not only understands regulations, but they also understand business, and they understand member needs, and they understand that we're here to serve the members. Our audit and our compliance folks really do an amazing job of working with us and literally partnering with us and collaborating with us on how we can make things happen for the members and for the community. I mean, I've worked at other institutions where the compliance folks were seen as adversaries, not at KEMBA. But regulation and compliance remains to be a challenge, and it seems like every 5 days we're getting a new regulation being introduced. So it's tough staying on top of that, but we're doing it.
Great. Thank you, Rick. With that background for your perspective in your market, what are your areas of focus this year? Do you have any new products or services planned?
We do. But with products and most of what we do really being commoditized, the area we feel that we're going to win, or we're going to make a lot of headway with the membership, is on the member engagement piece. Like a lot of credit unions, a lot of financial institutions, we offer indirect lending, and we have fintech partnerships that have been instrumental in adding to our member base.
Mhm.
But the key is, how do you engage these members once you bring them on board? That's something that the majority of credit unions still struggle with. Hopefully, we're putting together the secret sauce to make that happen. So the onboarding piece of the member engagement is important to us. The other one is what we call the member journey. Once your member comes on board, we use a measure that's called the effort score. And that's one of those scores where the lower, the better. The effort score is a reflection of how much effort the member has to put into doing business with KEMBA. So we measure the member journey in those terms, and we want to make sure that it becomes easy and it becomes frictionless and fast for members to do business with us. So that's another big part of the member engagement. And the last piece of it is, in our strategy plan, we state that we are, if we're not already, that we are going to be a high-tech, high-touch institution. So we're
Mhm.
not shifting away from the physical touch points. We want to augment the physical touch points with more digital touch points. So we're giving members the opportunity or the option to do business with us in any way they want, where they want, and how they want, in a way that's going to accommodate their lifestyle and not our way of doing business, or our business hours.
Right.
So member engagement is the first one. The second piece is, um, how do you, I talked about rising interest rates, and that how that has impacted the refinance mortgage market. How do we make the shift? How do we pivot from being a refi shop to getting into the purchase market and working with realtors and real estate agents and builders and what have you to get more of that business? Well, that's going to require a whole different strategy that we've never really focused on in the past. It's going to require new products. It's going to require new processes, new systems, and certainly new talent. And we have invested in all of those things. We're in the process of introducing 4 new mortgage products. One of them being the medical professional, dental professional type of jumbo loan. And the other 3 are focused around, or centered around, first-time home buyers, which is a big, big thing for us here. The third area of focus for this year, Larry, is our small business our small business business unit. Now, historically, we at KEMBA have been very good commercial lenders, but we have not done a good job managing those relationships on a holistic basis.
Right.
Last year, about the middle of last year, we launched the SBA lending business. And within the 6 months of the year, actually the 4 months of the year, when we actually were producing, we ended the year as the number 3 SBA lender in Central Ohio. And we are now in the process of getting our preferred lender status, which is going to be instrumental in helping us get faster and better at small business lending. The other thing that we did with the 2 other things that we did with the small business, one is we partnered with an organization called KEVA and the Small Business Development Center at the Columbus State Community College.
Mhm.
And the idea behind that is for us to partner with KEVA and their resources to help develop small businesses from the ground up within the community. And we help them with everything from, or we and KEVA help them with everything from budgeting to business planning, to securing funds, to learning, I mean, we even go to the extent of teaching them how to apply for a business credit card, or how to put a pro forma together. And lastly, on the small business front, we changed our business model to where our commercial BDOs are holistic relationship managers now. They're not just lenders. They need to look at the total relationship that these business members have with us, and even take that beyond the business limits and talk about their personal banking needs as well. So those are the top 3 areas of focus for the coming 2 years.
Well, thank you. That's quite a portfolio you're taking on. So, Rick, I understand you've also made some changes recently to your consumer lending application process. Could you share some of those changes with us?
Sure. We've taken steps to improve I talked about the member journey. We've taken steps to improve the member journey across all of our business lines. We started with a consumer loan application. Being a credit union, we're certainly consumer focused. Our previous consumer loan application, the digital application, had a total of 42 fields that a member would have to complete to get anything from a $500 credit card up to a $500,000 home equity line of credit. So we chucked that out the window and we replaced it with a much more streamlined application that does a couple of things. First, it reduced those number of fields from the 43 down to about 20 or 23, depending on what kind of product it is that the member is looking for.
Mhm.
And then the second thing that it did is that it integrated, the new application integrates with our core banking system, which means that we don't have to do any manual data entry on the back end. The end result of that is the member can now apply for a consumer loan in about 5 minutes instead of 15 minutes previously, and we can have an answer for the member instantly as opposed to within 24 hours. The other thing that we did is our mortgage back office, what's called the back office, used to be outsourced to a third party who did a good job managing that piece of the business for us. But we've decided, we've got enough scale and we have enough knowledge and expertise in the business to bring all of that business back in-house. So now not only do we originate, we also process, we underwrite, we fund, and we have direct access to secondary market channels to which we can sell these loans if we so choose at a better premium without impacting the pricing to the member. And having that entire business in-house really gives us a lot more flexibility with pricing and allows us to offer more competitive pricing to the member and to control that member journey completely end to end. And the last thing that I'll mention here is we're doing something similar on the business lending platform. We are looking at adding a small business lending origination system up to $250,000 where members can apply online, upload documents online, and get a decision within seconds, just like they do on a consumer loan. We expect to have that in about 90 days, and we're super, super excited about that. We think it's going to make a big impact to the membership.
Wow, great. Rick, thank you for spending time with Credit Union Digest and giving us an insider's perspective on the market condition, your focus for this year, and member benefits to some of these great process changes. So Rick, again, thank you.
Thank you, Larry. It's good to be with you.
Great. All right. Thank you. So in closing, thank you for joining Credit Union Digest. If you have additional questions for Rick, please see the link in his bio.